Hey guys, welcome back to the channel. Today I'm going to be talking about the Bitcoin and cryptocurrency relief rally and ultimately how high I believe Bitcoin can go before turning around and heading back down to some of these lows. And we're going to be looking at some key support resistance levels and then as well some indicators that could potentially be the first major signs of resistance. So if you enjoyed the content, please do consider leaving a like and subscribing. Now I am on a daily here and I want to talk about this first region, which I think a lot of people have in mind, which is around the $28,000 to $29,000 level. Now historically this was a very important level of support. All the way back in 2021, we saw several bounces off of this level, basically holding support, as well as this level back here in May of this year. We had this consolidation phase before the final drop and capitulation down to these lows around 17.5k. So in the event we're continuing this relief rally and making it all the way up to say around $28,000 to $29,000, I think this would be very strong resistance. And ultimately any move above the $28,000 to $29,000 level I would speculate to be very short-lived. So something that could happen is we could have, say, a wick going all the way up to around 32k, but ultimately kind of rejecting off the $28,000 to $29,000 level. Any move above that would be unsustainable, and I think this is going to happen for a number of reasons. So when we have such a key level here, where we basically held it as support for essentially 500 days on 5 key bounces, I really don't expect this to be reclaimed on just one test. I think it's going to be a longer term process where we're going to have strong resistance off this point, and we might need to have several tests before actually having a definitive reclaim and retest of support. So this level also has confluence with some other resistance points, which I'm going to switch over here, the 200-day simple moving average. So this moving average is going to be a very strong area of resistance, and we can see this relief rally back in January, beginning in January. It took us all the way up to the $48,000 level, and we rejected off of the 200-day simple moving average. So the last relief rally we had was stopped at the 200-day simple moving average. And actually, I want to go back to the prior bear market and look at the last few relief rallies in 2018 so we can really understand why this moving average could be strong resistance. So let's go over here to 2018, and we can see we had this relief rally back in April of 2018 taking us from 6,500 all the way up to around 10,000, and we rejected off of the 200-day simple moving average. We also had this relief rally in June really taking us from 5,700 all the way up to around 8,500, yet another rejection. Okay, so we could be seeing this level hold as resistance. Again, it is going to be moving down because if we were taking a measured move, 200 days ago, we were closing prices around the $44,000 level. And currently we're only at $24,000. So that's a $20,000 difference averaged over 200 days. It's going to be moving down by about $100 per day. So if we were to say take out a general trend line, it is going to be moving down at this pretty rapid pace. And we could be testing it, say, at $31,500 if we were to go into September, or if we were to test it, say, in October, it could be all the way at 29 to 30K. So it definitely is a moving target, and it will depend if we are getting up to these levels when that actually happens. So now I want to switch over to the weekly time frame and go over the next moving average, which is going to be actually a band of moving averages, the 20-week simple moving average as well as the 21-week exponential moving average. So these moving averages have historically been a very important area of support and resistance. And when we're in a bull market, they can be obviously strong areas of support, and when we're in a bear market, they could be strong areas of resistance. So currently they range from around $29,700 all the way up to around $31,400. And similar to the 200-day simple moving average, these are going to be continuously moving down. Because once again, if we were to go back, say 20 weeks ago, we were closing prices in this $40,000 range, and this is just going to continuously average down. So while these are moving targets, again, we can see they have been historically a very strong area of resistance. So when we're below them, we can see these rejections that take us to lower lows following a retest of these moving averages. We also had another retest here in April, and this one was a little bit more convincing where we had a failed break above them, but ultimately we only had one candle close actually reclaiming them, and that was short-lived. We came back below on the next weekly close forming a resistance once again, and then coming back down to form lower lows. So if we're starting to get back up to that level again around 28, 29K, that will correspond to the horizontal level of $28,000 to $29,000, where we've seen time and time again this being strong support in 2021, as well as with the confluence of these moving averages. So I would expect, in the event of a continuation of the relief rally, this is going to be the level that the relief rally is stopped, and we would likely turn back around and then retest the lows. Now, turning around and then retesting the lows doesn't have to be a bad thing. And actually, one of the things I'm really starting to consider is that we have a potential bottom, and we just need to consolidate a little bit further. So what that would look like on a weekly is, say we continue this relief rally all the way up to this level, we reject, come back down. What I would want to see is just further consolidation and really building out a base, a longer term accumulation phase. And then from there, we could start to eventually trend back up at a little bit slower of a rate and really start to have more of a sustainable rally that actually does reclaim these levels. And then from there, we could trend back up. And eventually, I do expect something like this to play out, whether that be a retest of this low and then a double bottom, a lower low being formed, or some sort of higher low. Ultimately, it doesn't really matter. I think we have a longer term consolidation phase ahead of us, even if we have this shorter term relief rally that could potentially take us all the way up to, again, the $28,000 to $29,000 region, with a brief wick potentially going a little bit higher. So overall, that's my thoughts on this relief rally. I hope you guys did enjoy. And by the way, if you guys want to check out the sponsor for this channel, you can head over to ftx.us. This is where I buy, sell, and trade cryptocurrency. And if you want to use my referral code SNOWYCRYPTO, you can use you can get a 5% discount on your trading fees. So I will leave a link to that in the description below. I definitely recommend checking them out. And thanks again to FTX for being our partners. So I hope you guys enjoy the content. And as always, I will see you in the next one.